All right, and welcome back from the episode of Carnivore Trades. Today is Wednesday, November 2nd, 2022. Not done so already, give a video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, Fed day out of the way now. Market's closing in about 2 minutes here. And what a sell the news move we had today. So Fed came out and they essentially used the pause verbiage, essentially what I expected them to say. And we had some upside initially, and it was a bull trap. And we had a big sell-off afterwards. Spiders down now over 2.3%. NASDAQ down nearly 3%. Dow down 1.5%. And the Russell getting hit as well here, testing that 178 handle, that critical support there. That is down 3% there on the day, touching that 50 moving average here. We did a little short video earlier this morning and talked about this kind of channel here. Well, let's go over to the ES here. And you had a nice little channel here that we were inside of for a couple of weeks. That is now broken, and we are going to close below that green bar low there, barring an absolute magical miracle in the next hour here on the futures. As far as the cash session, we have already long since lost that. So this market is in serious trouble. Initially, you guys know that my sentiment here was that we'd probably push up here after the Fed announcement, at least for a little while, and then we would have some type of sell the rip action. That obviously lasted all of about 30 minutes, and now we are continuing to the downside here. This market is getting pounded pretty nicely. We will have some support right around this inverse head and shoulders neckline, although it is, let's face it, it's probably going to fail at this point. And like something that I've been saying here, really the last, well, I said definitely last weekend, but you still have, yes, you have that inverse head and shoulder in play, but you're still inside of this big down move. So your micro pattern here, your daily pattern, you have that inverse head and shoulders, but the bigger time frame, the weekly, the more dominant one, it's still bearish. And again, that to me right there, that looks like a 20 moving average rejection on the weekly time frame. So that is definitely something to note. If we look on the triple Qs here, definitely much weaker on the weekly. Obviously makes sense with rising interest rates. Triple Qs looking like they're going to close back below the June lows here today. And it'll be interesting to see if they even save this bar here at 266.82. We're actually trading below that currently. So triple Q is in pretty bad shape, and the Russell 2000, which has been holding up really well here, is actually starting to show some relative weakness as well. Again, flirting with that 178 handle. And again, I posted this for members earlier, but if you take a look on the 4 hour, this is something going into the Fed that we were looking at, is a sort of rising wedge here. Right there on the Russell. So you can see nicely that broke down earlier today. There's the closing bell. So spiders closing right at the lows of the day here, down 374.87 is the closing print. We'll get back into that in a second here, but you can see that rising wedge. And then on the actual spiders here, same exact thing. So you just draw from the lows here and go right up. And this is something, again, this is something that broke down earlier. This is before the Fed even started. And then look where we went. On the FOMC pop, we went right to that trend line. So if we just cut it down to an hourly here, you can see that's where we back tested. It got rejected, so that's a rising wedge break. And yeah, this market does look does look very weak here moving forward, and that's why I've been saying the last couple of weeks this is just a bear market rally. Again, we were looking for a little bit more upside. I thought it would have lasted a little bit longer. We did cut our long positions today, so that worked out for us. Got out with a decent gain. Nothing crazy, but again, still holding that course short position. And yeah, this market does look poised to move lower. The only thing that I would say that is concerning here is, if you notice, I do have the actual VIX up on my intraday. I usually have the VIX-C or the UVXY just because I like the volume. I like to look with the volume there. But I switched over to the VIX because I noticed that this is the only red flag. This is the only red flag for bears. The VIX finished up 9 cents. So either this is an epic, and I mean epic all-time fake out, and we're going to rip higher tomorrow. And I mean, like, you're going to have a rip your face off rally for the record books. Or we're probably going to gap down and you're going to see a rush for hedges. It's almost as if the market is like kind of stunned right now. It's like they don't even, it's almost like market participants are just like flabbergasted and they're not expecting this. And you're seeing the VIX-C here is up 2.69%. Let's take a look at the UVXY. That's up 3.84%. The UVXY is a little bit more leveraged. But the point is those are more short-term. Those look at short-term VIX futures a little bit more than, you know, the VIX, which is the VIX itself, which is more of it's balanced out between short, medium, and long term. So short term, yes, obviously you're seeing that higher volatility priced in, but on the longer ends, the VIX is not pricing that in yet. That's the only red flag for the bears right now. Everything else, they checked literally every single other box you can possibly check. Rising wedge breakdown, back tested. If we flip over to my normal lines here, you broke back below 380 on a closing basis. You broke below this inside bar low on a closing basis, this inside bar low on a closing basis, back below the 50 moving average on a closing basis. You know, the ES, same thing, back below this trend line. 100 MA rejection. I mean, every single box got checked for the bears except for the VIX. The other boxes, let's talk about them because they're important and this is what matters. Take a look at the 2-year Treasury, down 13 basis points today. This rallied up for one 10-minute candle. That's a 10-minute candle, and immediately faded. And, you know, if we flip over to, you know, the spiders, it rallied for like a half hour at least. And then it tried to bounce a little bit and come back up, and it tried to bounce here, and the 2-year just could not even get out of its own way. TLT, right, you know, straight down from the get-go. Didn't even hold a 10-minute green bar, just went straight down. So bonds, checking boxes showing weakness. The dollar index, which sold off initially, rebounded very strongly and closed basically where it was before it sold off. You know, the 10-year here, again, same kind of deal, actually closed higher than where it was when it sold off. So lots of problems here. I don't know how the bulls are going to get out of this one. You guys tell me in the comments. But overall, you have, you know, a clear-cut breakdown here, pretty much any way you look at it. So, you know, is there a chance we could go down here and bounce off of this inverse head and shoulders? You know, technically, this is not a failed pattern yet. You still have an inverse head and shoulders until you close below this neckline. But this candle here, man, it looks a lot like, you know, it looks a lot like this one. Let's just clean this up so you can just see. It looks a lot like this one. It looks a lot like that one. It looks like this one. You know, these ones here. This is a wide range candle with heavy volume. Take a look at the volume lately. Again, so we're going up on decent-ish volume, and then we're selling off on heavier volume. Again, just not a good look here overall for the market. Again, triple Qs here, outside candle, wiping out, let's see, what do we got here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 2 weeks worth of gains. You've wiped out here with one candle on the triple Qs. And again, look at the volume, decreasing on the way up, increasing on the way down. And this is, you know, this is not a good look here for the market. Yeah, this does look pretty nasty. Again, bears come back pretty quickly, don't they? That's what bear markets can do. Anyways, so we talked a little bit about rates here already. Let's look at the 10-year daily. Again, still holding this 20 moving average. Again, pattern is still fine. No problems there. It's holding up fine. 30-year, same kind of deal. Now, it was red today, but you have to figure a lot of it was, you know, it was down initially and it had to rebound. So a lot of work had to be done there. The 2-year, though, down pretty nicely. I want to flip over here and show you guys the yield curves. So again, 2s and 10s down to 52 basis points. That's basically at 52-week lows there. 3-month 10-year did manage to bid back up by the end of the day, but still at basically at 52-week lows. 5s and 30s rallied up and then came back down, and 10s and 30s finished negative again. So yield curves, you'd think that, I mean, it goes without saying, obviously, but the Fed did mention pause talk, but yields were saying, no, this isn't, you know, even if they pause, what does that even mean? So it just means they're not raising rates as high. You know, maybe they only raised by 50 basis points. It's still raising rates. So that is what is going on right now. And that's kind of what we projected here over the last couple of weeks. I just thought that there would have been a little bit more upside. I thought they would at least been able to keep us green until tomorrow, or at least until the election, but that does not look like that is going to be the case here moving forward. Anyways, let's flip over here. Semiconductors actually held up okay earlier in the session. They were actually green. If you flip over here on the intraday, they were green yesterday all day long, even despite the sell-off, and they were green most of the day today, obviously, until that final little sell job there at the end. But again, just covering above that 20-day moving average, it's, the only thing you can kind of say for it is that it didn't wipe out as many of the gains that the triple Qs did. And a lot of that has to do with AMD. They reported pretty good earnings, or, well, I wouldn't say pretty good, but it was not terrible, which this market's kind of priced in terrible earnings. So that did gap up, and that helped out the semiconductors earlier. But again, finishing lower on the session. IGV here, outside candle down. So guess what? That head and shoulders, that's valid, and that has played out. So that is still, you came back and back tested it twice now, and it has gotten rejected. That's a power rejection with good volume there. So IGV, that head and shoulders is in play, and that should be down. That should be good for, yeah, probably about 225 or so, maybe 220. So I'm just doing that rough calculation off the top of my head. But yeah, IGV in a weak spot as well. Transports here, just another weak showing. You tried to get back above this trend line, couldn't do it. Again, we talked about that gap fill, and I said 14,000 would be good weekly and daily resistance. Didn't quite get there, and rejection now back below the 50 MA. And we're basically just stalled out here at 13,000, but a pretty good outside candle there for the DJT, down 3.15%. 10-year, again, we talked about that. We talked about yields. XHB, outside candle down, just like everything else, on pretty good volume. Notice the uptick there in the bottom. And then on the weekly, again, you're still stuck in this sort of weekly bearish kind of consolidation here. There we go. So again, that's still that weekly bearish consolidation, just inside bar there on the XHB, wedged between the 20 and 200 moving average. So again, still showing some weakness there. ITB, same kind of thing here. Outside candle down, and then the VNQ today, which has rallied off the lows, getting rejected right at that gap window. So no gap fill here for the VNQ. However, I will say, for what it's worth, I don't know how much this really matters, but there is room for a potential higher low here, because you've rallied nicely off the lows, and you had kind of I wouldn't quite call it a V shape, but it's holding up decently despite the sell-off today. So there is room for a higher low if the market can find its footing, and it could potentially get back up to that 86 area, potentially. But let's not rule anything out just yet. XLF down 1%, and that's a pretty ugly reversal candle there on the day. I'm surprised this wasn't down more, but again, financials have been holding up really well. I'm looking at JP Morgan right now. That's down 1% on the day, but that didn't even really take that big of a hit here until really the last hour or so. If we flip on, that's a good topping tail right there though on the daily, I will say. But on the intraday, this actually held up really well. So XLF continues to be a strong sector. But again, down just like everything else. Broker dealers double top. So that's where it found resistance there. Finally at that 473, 475 kind of handle on the broker dealers. Again, still remains a strong sector. Crude here, holding up well. Just looking at this candle, you wouldn't think that anything happened today. Crude kind of hung in there well, and it's kind of just flirting with that down sloping trend line. You break above that on a closing basis, that will trigger an inverse head and shoulders, so just be aware of that on crude. But it looks okay. I mean, it's got that little inside pattern that we talked about yesterday, and it's holding up well, and I don't see any real problems currently. Again, the only issue is, does the administration try to whack it one more time here before the election? I would think if they're going to do it, they'd want to do it before the weekend, so that way they could talk about it all weekend long, and kind of, when crude can't trade, essentially. But in any case, XLE here. So gap up yesterday and a pretty good sell-off here today. Basically stalled out right at that upsloping trend line there. So, it has a chance to break that tomorrow. Again, I've been talking about this. It's very overextended, down 2.41% today. But again, still a strong sector. It's overbought, yes. It needs to pull back. And again, if the market pulls back and, if everything's down, this is going to be down. Spiders are down. It's going to drag this down as well. You see XOP here stalling out at that double top there. And the OIH, again, continuing to pull back, but still holding up okay. So, I mean, the only problem I have with it here is it's up 50% in the last month. So big problems there with OIH is that it is overextended. Nat gas reversing. Again, this one has been a volatile one all year long, hasn't it? Down big yesterday, engulfing reversal yesterday, and then almost an engulfing reversal today. Ultimately, this is actually kind of holding up all right. So you have an up move, and now you're just flagging near that 20 moving average. Remember, so you chopped here for basically a month, and there's your gap fill there, your 200 moving average. So if this puts in a good enough pattern, this can move higher, you know, possibly up to that 750 area. But for right now, it's holding up okay. I still think dips can be bought in this. I like nat gas, all things considered. Dollar index up 0.5% today. So again, I feel like I've been saying this for pretty much all year long, but it's holding the 50 moving average. It's holding this upsloping trend line and got a nice bid off that, stalled out at the 20. There's, like I said yesterday, there's micro resistance, a little bit of minor resistance at 212, but really nothing else till about 114. So dollar index still holding up really well. And that's putting pressure on gold here. You see gold rolling over. What did I say yesterday? It's got to get through 1675 before we can even talk about another up move. And it went right up there. High of the day, 1673 spot 1. And a pretty good reversal. So this does look poised for a head move lower. And this is definitely in a weak technical position here. Moving forward, silver in much better shape. It did reverse a lot of the gains though, and finished negative, so down a little over 2%. Still holding up a lot better than gold though, but I don't really have anything currently with silver right now. I do like it better than gold though. And then platinum also just kind of chopping right near this 200 moving average. Platinum's holding up really well. Again, red on the day, did not take out yesterday's low. Neither did silver for what that's worth. And you are starting to put in kind of a bullish inside bar here. So if this consolidates more, this will get up to that 1,000 handle, maybe even 1020, 1015. The longer it consolidates, the more juice it could have to the upside. Copper here, kind of a nothing burger, just like crude. It's almost as if nothing really happened today. It didn't really it pretty much just went sideways all day long. So if you didn't know the Fed was happening, okay, this was a little after hours, so that makes sense. That way it doesn't look as crazy on the daily, but either way, kind of an inside day here. You do have a bullish inside bar on the daily. Again, my problem with copper here moving forward is that this is a weekly bear base until proven otherwise, so we have to be careful with that moving forward. And then on to Bitcoin here, so let's flip over. Dogecoin was finally negative again, so that got rejected at that 15 handle. So pretty good sell-off there on Doge, although it's still, made higher lows. Bitcoin here, down 1.3%. Believe it or not, Bitcoin still has a bullish inside bar. So believe it or not, you've got up move, and then you've got a nice little, 1, 2, 3, 4, 5, 6, 7 days inside. So if this can hold up, I wouldn't rule out a bid here, but it's going to require the equity markets to participate. If we gap down tomorrow and the VIX starts to surge, this ain't going to happen. So just bear that in mind. But Ether, we talked about that inside bar there yesterday. That looks like it's going to get closed below. So that is a little bit of weakness there. But really the big level for Ether is this blue trend line here, right at about, 1450 we'll call it. So that's going to be your area to watch there for Ether on the downside. But for right now, Bitcoin, crypto down with everything else. Although these patterns aren't terribly broken at this point. So just bear that in mind. If the market can somehow participate and find its footing, maybe they can get a bid here, but right now you have to think this is a pretty bleak picture. So, I mean, that's as clear of an outside candle down as you're going to see. We broke through support. 380 was a critical level. I've been telling you guys that critical level. We couldn't get above 390. That's also a critical level. Just major problems out here for the equity markets. And again, it's going to require a major rabbit to be pulled out of the hat for the bulls to do anything with this. Anyways, guys, going to wrap it up here. If you guys are members, don't forget we're going live at 4:45, so stay tuned for that. Anyways, you guys take care. I will talk to you guys all tomorrow.